Hi, this is Paul Chima, sales representative with Remax West Realty, Toronto, Canada. I would love to introduce you to Craig Denby, who is a mortgage agent with the Mortgage Group. And he has been in this profession for a pretty good time now.
Yeah, a few years.
And he's helping so many people achieve their goal, which is home purchase. So let's talk to Craig Denby and find out what value he brings to you as a home buyer and how he helps you close the transactions. If you have any question later, you can always put your comment down there and I will have Craig reply to that later. So Craig, thank you very much for being with me on this platform.
Always a pleasure being in your company again, Paul. It's been almost 10 years since we've been friends.
Absolutely.
And you were actually a customer of mine at one point in time.
Yes,
and you actually selling one of my restaurants for me when I was in the business.
So like you said, so I sold Craig's restaurant. It was called Quiznos on Tompkins and Highway 410.
Steeles and 410.
Steeles and 410.
Yeah, Steeles and 410.
Close to 410.
Sure.
So now Craig is into mortgage business these days, and I know him to be a very intelligent person, someone with a lot of resources. He was trainer with Quiznos and he had trained tons of franchisees achieve their dreams. So now he's into different line of business, but the psychology behind remains the same: education, teaching, bringing the right results.
Exactly.
Well, wonderful to have you here, Craig.
Oh, thank you for giving me this opportunity to speak with you, Paul, and speak with everyone at home watching on their televisions or their computers. You're right, Paul. I was with a chain, and we were forward-facing. I dealt with the public on a daily basis. Yes, I trained people from chief operating officers and vice presidents and corporate people from all across North America. That's great.
No,
but again, we helped a lot of customers, and I appreciate that. It was my forte, respectfully. Well, that was a decade ago, and I've moved into this. But again, it's the same sort of thing, Paul. I'm helping people on a daily basis.
Yes.
I'm giving them a product or service, which accomplishes something for them. And in mortgages, everyone eventually will have a mortgage, and when they have a mortgage, they want to make sure they have that round peg going in the round hole, not the square peg going in the square hole, like unfortunately some people have.
Yes.
And the reason why I mention that is, like, I'm with TMG. TMG is a great company. We're the largest private brokerage for mortgages in Canada.
Awesome.
You know, so again, we're a big company. I'm been with them for almost 2 years. I really enjoy it. They got a great team. But more importantly for you as a client, we used over 50 plus different lenders last year. And each of those lenders may have had one product. They could have 10 or 20 products. So you can do the math, or you can leave it for me. Usually I'm pretty good at math. Sorry, Paul, I couldn't resist that joke.
Yeah, no.
But the point is, I got a lot of different opportunities. So maybe in the past you've thought about going to a brick and mortar location and sitting down with someone, and they pull out a sheet and they have 5 or 10 products, and hopefully you think back and say, I remember watching Paul and Craig, and he says he had 50 different lenders, and out of those 50 different lenders, some have one product, some have 10 or 20. So I have a lot more options for you. So again, I want to find you that round peg to go in that round hole to give you the best product.
The right peg and the right hole.
Yes.
Which is very important. But when you put a wrong peg in a wrong hole, that takes more effort and causes more stress or pain. So Craig, we see that mortgage industry, lending things have changed a lot.
Yes, and they continue to change.
Where do you see the market going?
The mortgage business, well, you know what? We have 200,000 new people moving into Southern Ontario every year. And especially in the GTA, what I call home and where I was born.
Yeah.
Just like my parents were immigrants and moved here back in 1967 when Canada turned 100. We just passed our 150th.
Yes.
Nothing's changed. We have new people coming in every day. The demand's not going away. So people are going to continue to need mortgages. Just like it was 50 years ago, we have multi-generational families. The big opportunity here is for the average person is you have a lot more choices. And that's a great thing because the mortgage business has changed. And it's changed a lot in the last year and a half, just with B20, the legislation federally. But the opportunity is there, and that's why it's critical to use a mortgage professional, because a mortgage professional is going to take you, which is like a round hole, and be able to put a round peg in there. I'm not going to smash a square peg and try and make a mortgage deal work for you. I'm going to find you the right deal and the right product for you and your family. I think that's critical more than anything right now, Paul, is we get you the right product and the right terms.
So Craig, how do you see, because the banking rules changed,
Yes,
right? Federally controlled institutions have different set of rules now.
yes.
So how do you think that has affected people so far? Because they came into existence from January 1st this year.
Sure.
From January 1st to now and before January, how do you see the difference between buyers qualifying for mortgage?
Well, they're going to unfortunately they're going to have to go with the qualifying rate. So as of today, when we are filming this, I would qualify you at 5.14. So even if I got you a mortgage at 3% or 2.8% or 4.3%, I'd go on for that afterwards, but I'd still have to qualify you on that 5.14.
So that is the posted rate you're talking about.
That's a qualifying rate, and that just means what the government's going for here, Paul, is to make sure that if rates do increase, you can afford your mortgage. But I want to tell you, as I'm looking in the camera, historically, less than 1% of people default on their mortgages. Mortgage failure rates are very, very low in Canada, so it's not as big of an issue as people make it out to be. People will pay the mortgages, and when the 99 of 100 homeowners are paying the mortgages, it's pretty darn good. But yeah, you're going to be able to qualify for, unfortunately, maybe a bit less of a house. But again, that's where a mortgage professional is going to come into play, because I'm going to have multiple lenders I can look at to see what's going to fit you best. You know, some people are going to be looking for what's called a high ratio mortgage, which is basically the value of the mortgage is between 80.1 and 95%. A lot of first-time buyers in that range. So they're going to have to qualify, obviously, Paul, for a mortgage insurance. But if you're under 80%, you're still considered a conventional mortgage. And at the end of the day, we're going to find the best opportunity for you based on what the market is voting right now. And again, I'm licensed in Ontario to do mortgages, so I'm not going to sell a mortgage to someone in Alberta or Quebec because I really don't know that market. My market is the Greater Toronto, Greater Hamilton, down to Niagara Falls. That's my client base.
Perfect. So how do you predict the interest rates going up or down?
Oh, if I had that answer to that question, I'd probably, I'd be on I Love Jeannie back in the 1970s, Paul. No,
I thought maybe you have some maths in your mind.
I wish I could get that Doc Brown from the Back to the Future hat on and go Back to the Future, but I can't.
I'm seeing it's going up by quarter, and I'm wondering where it's going to land eventually by end of this year. This kind of people keep asking me that. But anyways, I know he doesn't have a crystal ball.
I don't have a crystal ball, but
he doesn't know the president of any bank that he can confide the confidential.
Bank of Canada, and you know they're going to set rate. They're going to set the rates based on policy and what the data they have in front. But I will say this, Paul: if rates do go up by another 0.25%, it's not going to be tens of thousands of dollars. It's going to cost you over the course of a week or a month over the year. It's still going to be affordable for the average person. You may just have to curtail your spending, but if the average person had mortgage rates go up by 7 or 8%, that would be I wouldn't say cut.
Yeah.
Cut. Go back. So if mortgage rates went up by 4 or 5%, that would be hard for a lot of people. I truly don't see it, Paul.
Well,
if we have the variance by a percentage point or two, but again, markets go up, markets go down. But people still have a home, and having your own home is key. That is your number one way of securing your own financial nest egg, is having a house in this market historically.
For a buyer who is looking to buy a house,
yes.
What advice do you want to give him before he even starts looking for a house?
A foreign buyer? Call me. Oh, sorry, I couldn't resist. Sorry, Paul, I couldn't resist. Always a joker. No, respectfully, for foreign buyers, it's like any other buyer.
No foreign buyers. Sorry, I think you didn't read me clearly. What I was saying, for a buyer.
Oh, for a buyer.
Who is ready to buy a house,
yes.
Before he even starts looking for a house, what advice you have for him?
The very first thing I'm going to give you right now is I want you to go on Equifax.ca and pull your credit report. I want you to pull your full credit report. Right now we use Equifax and TransUnion, but I'm not trying to say one's better than the other, but I would pull Equifax.ca. I would get at least that one, if not both, and I would check your credit report and see if there's any errors or omissions, and if they are, get those corrected. Have an understanding that every borrower, before they lend you money for a mortgage, Paul, they're looking at the same thing. Is this person going to be able to pay me back? And they want to see. They want to be able to see that clearly defined history with that person.
So check your credit report, or you
Yes.
can consult him
Yes.
to evaluate your credit report, because sometimes it may not make sense to you. Some people don't even know what's on their credit report because someone else has been getting credit cards on somebody's name, right?
You know, that's
It's ID theft.
Yeah, ID and credit and fraud is a big challenge.
Yeah, it's a big game here that's
100%.
happening here.
100%.
And yes, credit report is one thing, but I would also add here that get a pre-approval or get yourself evaluated for a particular amount of mortgage. That will give you an example.
It'll give you a good
deadline.
It'll give you a good ball range. And you know what? Here, I'm going to give you all a little insider secret. And it's so obvious, but no one ever tells you this. In mortgages, you are going to borrow a certain percentage against the house. So if the
Yes.
house is worth $1 million and you put $500,000 down, your mortgage is worth 50% of the value of the house.
Yes,
Correct?
which is called LTV.
LTV. That's right.
Yeah.
But so you have a 50% of your house in straight equity. The more equity you have in the house, the less risk it is for the lender. There are obviously lenders are going to be more apt, you know, and they are more likely to have a bigger appetite
Yep.
for someone with has an LTV of 60 or 70% versus
Yeah.
someone with 95.
I
So
agree.
that's something that obviously you want to take into effect. How, you know, where are you going to be in that sort of range? But you're right, a pre-approval is good, but you have to understand when it comes to mortgages, folks, we can do an application, we can go through it, you can purchase your house, but at the lender level, I hate to use the word but at the lender level, the underwriter is going to scrutinize it. And if the scrutinizer, and even if you have a pre-approval, if the underwriter, he doesn't like what he or she sees, they can rescind the offer.
Well,
And that's a big issue.
Wait for me here because I have another question connected to this thing.
Okay,
After a buyer gets pre-approval,
okay,
you know, because when it is a home buying season,
yes,
many big stores will also launch awesome deals, right?
okay,
Buy furniture for free for this time, we'll finance it free. Buy appliances, car dealers jump in. Everybody is trying to give lucrative deals to people,
yes,
right?
course.
So now I have got a pre-approval as a buyer.
yes.
I don't worry because bank told me that they will finance my home. Now, can I go get another big loan for a car or for appliances, for anything else? How is that going to affect my approval?
Well, Paul, you can do that. You can go and get a brand new car. You can go buy brand new furniture, appliances. That's great, but that's called a whether it's on a credit card or an installment plan. That is a revolving or installment credit, and the more revolving or installment credit you have, that's going to increase your debt levels. And by increasing your debt levels, the ratios go higher. And every lender has a level for ratio they want to see. I can throw numbers at you at 28%, I can throw numbers at you at 49%.
But I'm asking you here. But they already checked my credit. They gave me approval.
They've given
So
you pre-approval.
I'm funny.
They love you. They think it's great. They want to give you money. But the challenge is they've given you pre-approval on having this level of debt,
Okay.
having this level of income, having this level of down payment. Now you're going out and you're changing the rules. You're moving the goalpost. And the lender can look at it and say, but his debt service ratio is up by 8%. It doesn't make sense for us to lend him that mortgage or that product anymore. So you can go out and do it. It's a free country, but just be cognizant, folks, of going out and taking on extra debt.
So you're telling us that after I have been pre-approved for a mortgage, I shouldn't get into any big credit purchase.
I recommend to my clients that you don't.
No, do that.
Don't do it, because once we've got a commitment from the lender at any time after that commitment may go back and just see if things changed. Because again, the underwriter wants to make sure and comfortable with this deal they've underwritten. And, respectfully, what we want to make sure is we want to paint such a great picture for them that they feel comfortable in doing the lending.
So it is not that they will just check your credit once when they're giving you pre-commitment letter.
There's no limit. They can check it once. They may not check it at all. They could check it 10 times. It all depends on the lender and their appetite for investigation in regards to after the letter before they do the final funding. But it's very common for them to check, though, Paul.
But
at least
is there something that triggers this behavior? Like
not necessarily. They all have their own matrix, they all have their own policies, which they're not going to share with you,
Yeah.
right? Or they're going to share with me, and they're not going to share with the client. Again, they just want to make sure that the client has the ability to repay the money. That's all. And I guess the issue is not buying a $1,000 television set. The issue is buying an $80,000 brand new SUV, because obviously that's going to be a big thing. But I
Yes.
just truly recommend, once you start shopping for a mortgage product, you don't go out there and start looking for other forms of additional credit.
Yes.
The industry term we actually use, Paul, is called a credit seeker. A credit seeker that's applying for different credit cards, charge cards,
Store credit.
store credit. Credit seeking usually sets off a flag with them,
Yeah.
like, why do they need all this different credit all of a sudden? They already have a MasterCard, they may already have a Visa, why are they applying for 3 more? And it just sets off that sort of trigger, which gets them more concerned. So I just want to make sure that they feel very comfortable. Because ultimately, folks, Paul is to help you find the right house, negotiate you the right deal. My responsibility to you is to paint the right picture, get you the right product on the best terms we can get for you, so you can comfortably move into your house on that day. And we're here to help guide you as professionals from the time you start looking for your home to the day you finally put your key in. Because Paul, that's a stressful time. From the time they start looking to the time they actually put the key in. And I've been a client of Paul's.
Yes.
Paul was actually sold for me. And Paul, I'll admit, I was stressed. And Paul looked at me and he put his hand on my shoulder and says, Craig, relax. I'm here for you. And that's why Paul's a real estate pro. And that's why I'm here with you right today. Because I
Yes.
like how you handled yourself on my transaction.
Well, it is a stressful experience buying or selling properties.
Yes.
And buying is more stressful because people don't know when the bank will just pull out. They will say, I'm sorry, I can't give you funding, and now you have a commitment letter, which that means nothing at the moment. And so many things happened past year for all the transactions that were sold in April, March last year, came for closing in August, September, and so many deals didn't go through, and so many people lost their deposit, and so many people are into legal battles to recover their deposit. So we want to avoid all those situations. When you buy with a good team, they make sure that you are qualified, you are looking at the right property which actually fits your scenario, your family scenario, not that this is what you want, but what is best fit for you. We are consultants.
Yes.
We are advisors. We are not just salesperson or mortgage agents. We are way beyond that. Our goal is that you guys stay happy in your home forever and you enjoy it.
I was going to add on to that, Paul. I don't spend tens of thousands of dollars putting up billboards and signs up every month.
Yes.
I don't do that.
Yes, neither do I.
My clientele like yours is based on referrals. And it's really nice when I look in the camera here with you, Paul, and say, I've had people refer other people to me because they said, Craig, help me. Like they say, Paul,
Absolutely.
help me.
So that's the key word.
That's the key. Help. We're here to help. We're here to help guide you. We're here to try and help you. And give you the tools that you can actually get the home you want with the least amount of stress possible.
Yes.
But you're right, Paul. There were some issues last year. With some falling pricing, but what the client needs to know more than anything is they actually have professionals watching their back and trying to do everything they can to facilitate and smooth out the process for them.
So now, if you heard this talk carefully, this is what he suggested. Get pre-approved. That gives you a ballpark figure up to where you can go in buying your home.
Okay.
Get approval, this second thing you talked about.
Pre-approval is good. Just have an understanding, folks, that pre-approvals are only good for like a basis. They're not.
It's a basic.
They're not a concrete animal.
It gives you a kind of
and that's what's key.
Limit where you can go.
You need to know where you want to be. Get your pre-approval, obviously, Paul.
Yeah.
When you actually go to buy your home, you want to make sure you have all the proper conditions, like Paul would say. Make sure condition of finances in there. Make sure there's condition of home inspection and so many other things.
There are so many scenarios for that. So now get pre-approved. Do not get into any big purchase till you get into your home.
Yes.
Keep away. This is the biggest thing, I think, biggest nugget you should take home. Do not get into any luring offers from those dealers. They need to sell, but if you get into that trap, you are going to lose a home.
Well, there's a possibility of it, and I'm not saying it's not going to happen.
Well,
but but
Possibility, yes.
there's a distinct possibility, Paul.
Yeah.
And again, I'm here to paint a picture for you folks with the lender. I want to, and by painting the proper picture is going to get you the right product, the right terms, and the right opportunity for you. And
Yes.
that's what I truly want, Paul, more than.
So I will have Craig give his contact information. You can always give him a call. He is
Sure.
available,
Sure.
and he will guide you very thoroughly through the whole process, because you need to sit down with him and learn the basics from him before you get into a home search. So go ahead, Craig.
So anyone, feel free to reach me at Craig.Denby at mortgagegroup.com. My mobile, which is unfortunately always on, according to my missus, is 289-680-0721. Or if you want to look at me online, you can find me on Facebook at facebook.com/CDN Mortgage Maker. And my website is www.mortgage-financing.ca. So again, mortgage-financing.ca. Facebook, Canadian Mortgage Maker, or 289-680-0721 on my mobile. Again, Paul, thanks so much for giving me a couple minutes today.
No problem.
As always, I always enjoy working with you. And your smiling face.
Look where we are now.
Oh, it's a decade later. We're a little bit wider, unfortunately, but,
Yeah, I know.
but respectfully, like I said, we got our wits about us, and
So-
we've helped a lot of people over the last 10 years between our different
So once
things.
again, this is Paul Chima from Remax West Realty, and I strongly recommend Craig Denby for all your mortgage needs. Give him a try. If you see this video, tell him that you saw this video before you reached him. He will give you a cup of coffee as well. So,
We'll be billing Paul for the coffee for sure.
well, that's fine. That's okay with me as long as you are treated well. So if you don't like him after working with him, give me a call. I know how to handle this guy.
Oh, yes, he does. Yes, he does. Thanks so much, folks. Again, I'm Craig Denby at the Mortgage Group here in Ontario, 289-680-0721. And I look forward to seeing you on the other side of the camera. Have a great day.
And Paul
Bye-bye.
Chima, 647-333-2273. Take care, guys.
Bye-bye.